From 80k to 1 lakh. 5 reasons Sensex could hit the historic mark by August 2026. Sensex prediction: the Indian stock market has been grappling with multiple headwinds, from Trump's tariffs and foreign capital outflows to weak corporate earnings. Over the past year, the Sensex has managed a modest 1.4 gain, closing at 80,235.59 on August 12. For the index to reach the historic 100,000 mark by the next Independence Day, it would need to rally about 25 in the coming year, a tall order given current market conditions. Still, markets have a history of springing surprises. Morgan Stanley's bull case scenario sees a 30% probability of the Sensex hitting the milestone by June 2026, driven by lower crude oil prices, an easing of the global trade war, and stronger government reforms. The firm's projections assume oil prices staying below 65, multiple RBI rate cuts, GST reductions, progress on farm laws, and annual earnings growth of 19% between FY25 and FY28. India Incorporated's lackluster earnings, particularly from heavyweight sectors like IT and banking, have kept the market under pressure. A revival in earnings in the second half of the fiscal year will be essential for valuations to expand and for the bulls to regain momentum. To counter the negative sentiment from tariff tensions, bold policy moves are needed. Infrastructure investment, manufacturing push, free trade agreements, and a potential tweak in LTCG tax could help reignite investor enthusiasm for the India growth story. The end of the Russia-Ukraine war, a stable Middle East, and a favorable global trade environment could significantly reduce uncertainty and boost both sentiment and foreign investment flows. While domestic retail investors have grown in influence, foreign institutional investors remain pivotal. The recent selling spree by FPIs has weighed on markets. Their return, coupled with strong local inflows, could be the catalyst for a sharp upward move. Swipe left for next video. The RBI's August policy meeting projected FY26 GDP growth at 6.5 and lowered CPI inflation estimates to 3.1. A stable macro backdrop would support profitability, attract capital inflows, and keep sentiment buoyant. For the Sensex to gain 25 in a year, a perfect alignment of strong earnings, policy reforms, geopolitical stability, foreign capital inflows, and favorable macro conditions is necessary. Much will depend on how the Trump tariff issue unfolds, the government's economic stimulus measures, and global market cues.